The federal government is playing hardball after two automakers dropped some Canadian car production. CBC News has learned it's limiting the number of tariff-free vehicles they can import from the United States to sell here in Canada.
On one hand, we've got this tariff on finished auto goods, and if the vehicles made in Canada cost 25% more to American consumers.
Canada is a very important market to U.S. automakers. Extremely important. It's the most important market they have outside of the United States.
Canada has just detonated the biggest shockwave the North American auto industry has seen in half a century. And this time, nobody can pretend they didn't see it coming. In a move that stunned both Washington and Detroit, Ottawa has officially pulled out of its joint vehicle production agreements with the United States. The era of automatic integration, where Canada quietly followed America's lead, is over. And the message behind this decision is louder than any speech, tariff, or negotiation tactic. Canada is taking back control of its industrial future. U.S. officials expected frustration. They expected heated statements. What they did not expect was a clean, decisive break, a shift so bold that it is now sending panic through America's automotive sector. Not tomorrow, not next month, tonight. Donald Trump wants nothing less than to surgically destroy Canada's auto sector. If we don't push back now, we lose everything. These warnings, once dismissed as political noise, now look like prophecy. The spark that lit the fuse began early in 2025. Trump's revived America First agenda unleashed a new surge of tariffs that reshaped the cross-border economy overnight. Vehicles imported from Canada were suddenly slapped with a 25% duty, with a threat to raise it to 35% if Ottawa didn't fold. Publicly, Washington claimed the move was meant to counter China. In reality, the first and hardest blow struck Canada, America's closest manufacturing partner. Businesses reacted instantly. Reuters and AP both described the shift as unprecedented. Stellantis began ripping production lines out of Ontario and relocating them to Illinois, a move that eliminated thousands of Canadian jobs in weeks. GM quietly scaled back operations in Ingersoll as EV demand cooled and U.S. policy became more unpredictable than ever. Ottawa tried diplomacy. It failed. Every call for dialogue, ignored. Every request for impact analysis, dismissed. Every warning about long-term supply chain damage, rejected. Prime Minister Mark Carney's government responded with escalating countersteps. Tax incentives for U.S. automakers were reduced. Legal action was filed against Stellantis. Future benefits were tied to real, verifiable investment inside Canada. But none of that compares to what happened this week. Because this week's announcement isn't retaliation. It isn't a bargaining chip. It isn't symbolic. It is a full restructuring of how Canada intends to build cars, create jobs, attract investment, and position itself on the global stage. And for the first time in decades, the United States is no longer at the center of that plan. Canada is no longer waiting for Washington to come around. It is no longer hoping for stability. It is no longer operating inside an auto system that assumes the United States will behave like a predictable partner. Instead, Ottawa has begun dismantling the very framework that built the modern North American auto industry and replacing it with something entirely different. This week, Canada officially suspended cooperation protocols, froze all future joint auto initiatives, and launched a full Made in Canada industrial blueprint built on sovereignty, strength, and strategic independence. For 3 decades, the North American auto sector functioned like one massive borderless machine. A vehicle built in Michigan carried Canadian steel. An SUV assembled in Ontario carried American electronics. Quebec innovations powered engines that rolled off production lines in Ohio. The borders existed on paper, but on the factory floor, they were invisible. All of it depended on trust. Trust that Washington wouldn't weaponize tariffs. Trust that elections wouldn't rewrite trade rules overnight. Trust that the supply chain linking 2 nations would always hold. That trust is gone. Trump's new tariff architecture didn't just disrupt the system, it detonated its core. Canadian-made components are no longer treated as North American, but as foreign, subject to punishing duties. Analysts in Washington themselves called it an economic strike disguised as friendly policy, a move marketed as countering China, but executed first and hardest against Canada. And once that line was crossed, Ottawa understood a painful truth. Staying inside the old system meant accepting permanent vulnerability. Withdrawal was no longer politics. It was self-respect. It was sovereignty. It was survival. This is not a tantrum, not retaliation, not a headline-grabbing stunt. It is a strategic realignment of Canada's entire industrial future. Carney's government has made the new rules crystal clear. U.S. automakers will not receive special treatment simply because they are American or because they own facilities on Canadian soil. If they want access to the Canadian market, they must prove, not promise, that they are investing in Canada's future. Real factories, real jobs, real commitments. And while American policy becomes more unpredictable by the month, Ottawa is widening its network of partnerships across Asia, the Indo-Pacific, and beyond. New agreements with Japan, deeper cooperation with South Korea, a landmark diplomatic breakthrough with President Xi Jinping at APEC. The message is unmistakable. Canada welcomes partners, but only the reliable ones. Those who cannot offer stability will no longer dictate the direction of Canada's economy. And here lies the deepest irony of all. Donald Trump's tariff crusade, marketed as a mission to protect American jobs, is now destabilizing the very sectors it was supposed to defend. The U.S. auto industry has always relied on one thing above all else: seamless integration with Canada. Canadian steel, Canadian precision machining, Canadian battery components, Canadian engineering talent, all flowing into American assembly lines like clockwork. Break that chain, even for a moment, and everything collapses. A single brake sensor delayed at the border can freeze a $500 million production line. A minor cost spike in Canadian metals ricochets into the price of every SUV rolling out of Detroit. Even a hint of instability causes boards to delay billion-dollar investments. Bloomberg reports that American automakers are already facing spiraling material costs, fractured supply channels, and delays that ripple across every stage of production. No nation, not even the United States, can build competitive vehicles without dependable partners. And today, the most unpredictable force in the North American industrial landscape is no longer China. It is Washington itself. This isn't Canada punishing anyone. This isn't sabotage. This is simply Canada acknowledging what Washington refuses to admit. The U.S. is undermining itself. Inside closed-door briefings, Canadian officials now refer to the USMCA as a kind of trade zombie, technically alive on paper, but drained of its spirit by unilateral American rule changing. No regional agreement can survive when one country rewrites the script without warning, especially not in a sector as complex and fragile as automotive manufacturing. So when Canada withdraws from the long-standing auto cooperation frameworks, it is not killing the USMCA. It is simply recognizing a truth the United States created. North American integration ended the moment Washington stopped respecting it. And while North America fractures, Asia is doing the opposite, moving with unity, strategy, and precision. South Korea is expanding defense industry partnerships at record speed. Japan is doubling down on EV battery alliances. Across ASEAN, manufacturing hubs are emerging with the kind of predictability companies crave. Asia is not waiting for uncertainty to resolve. Asia is building the next generation of global supply chains, clean tech industries, and advanced manufacturing ecosystems. North America hesitates. Asia accelerates. The contrast is impossible to ignore. And Canada has decided it will not sink with a partner that won't steady the ship. Even China, despite ongoing tensions, has begun welcoming Canadian investment, offering stability and scale at a moment when global uncertainty is rising. For Canada, this shift isn't a rupture, it's a deliberate rebalancing. But for the United States, it should serve as a wake-up call. Leadership is not inherited, and in today's world, trust is the only real currency. When one superpower chooses unpredictability, other nations will choose opportunity. For years, Canada quietly accepted a pattern of disrespect disguised as fair negotiation. We were placed on a national security threat list merely for exporting steel and aluminium. We watched as the United States used tariffs not as economic tools, but as political weapons, targeting core Canadian industries to gain leverage. And we saw American political pressure push companies to withdraw investment from Canada, not because the economics were uncompetitive, but because Washington demanded compliance. Canada's withdrawal from the auto framework is the clearest signal yet that this dynamic is over. It is not a retreat into isolation. It is the restoration of national autonomy. Prime Minister Mark Carney has delivered a message impossible to misinterpret. Cooperation only matters when both sides benefit. It cannot be an automatic duty. Stepping back from U.S. auto integration is not a sign of weakness or division. It is a reset of the relationship itself. After more than a year of tariffs, reversals, and erratic policy from Washington, Ottawa has acted with the confidence of a nation aware of its own capabilities. The road ahead may be challenging, but the direction is unmistakable, independent, intentional, and self-determined. Canada is no longer waiting for the United States to correct its behavior. From this point forward, Canada will define its own conditions, shape its own development, and decide its own future. The real question now is whether the United States can adjust to a new North American reality, one in which Canada is no longer the quiet neighbor, but a firm, self-assured nation that knows exactly what it brings to the global table. And perhaps that is the real turning point. The moment Canada stops responding to the choices of others and starts shaping its own destiny. Not an economy seeking approval, but a country with a strategy, a purpose, and a renewed understanding of its value. The world is changing, and Canada is changing with it, this time entirely on its own terms. Every trade agreement, every industrial policy, every diplomatic move now reflects one vision, a Canada that is self-reliant, steady, and respected. If once we waited for Washington to speak first, today Canada is the one setting the terms. A final question. Is Canada ready for this new leadership role? Share your thoughts below, because the future of Canada is something we are writing together.